Hello traders, this is Chris Keene from akeenpointofview.com. Most of the traders were sitting around anxiously waiting for the Bank of England and the ECB interest rate decisions, which were due early in North American trading. The Bank of England came as expected and kept trading in line. Kept interest rates in line and did not increase its asset purchase program. But then the surprise announcement in the morning came at 8:15 with the release of the ADP jobs report, which actually came in well above consensus figures, and this helped push the JPY Japanese yen pairs up across the board ahead of Draghi's press conference, which followed, I believe, starting at 8:30 Eastern Time. Most of the USD-JPY crosses, or JPY crosses in general, moved above their channels that had contained them over the last few weeks of trading. This made it interesting heading into Draghi's press conference, where it was expected that there could be an announcement of a new bond purchase program that could help lower the bond yields from Italy and maybe Spain, if they would actually ask the ECB for assistance into the program. But the only thing that Draghi did do is go over the details that had already been leaked prior on Thursday. And I had actually expected that the euro would fall after this, because also interest rates were kept in line, which they were widely regarded to be that they were going to be dropped by 25 basis points. That's neither here nor there, because the euro did fall quite just slightly, but then ended up the day higher, testing its highs for the week. So what do we have going in for trading onto Friday, the last day of the week? We have non-farm payroll that will be the big mover, but before that we also have the Canadian employment report that comes out on early Friday before non-farm payroll. And then we have Asian trading. We have the Australian trade balance, which could be interesting after last night's jobs reports to see if there is a significant slowdown in China trading. And then we also have an inflation report out of the Bank of England. But heading into trading tonight, we would probably have slow trading, but into tomorrow we could see a little bit of volatility. And the first pair we're going to look at, as we were talking about earlier, was the JPY USD cross. As the cross broke through the resistance level that had been holding it over the last couple of days around 78.70, and it's moved up to touch the 79 level. Now it is at the top of its current range, and it would be interesting to see, with quantitative easing expectations, if the non-farm payroll report number comes out better than expected, we could see the yen continue to push higher and maybe move all the way up towards the 80 level heading into next week. Now, if non-farm payroll report comes in line or worse than expected, we could see this pair retrace all of the gains that it had today in a relatively quick fashion in trading tomorrow. So it is important to keep your eye on the yen pair for actually a pure indication of how traders are seeing the translating the non-farm payroll data and how that might sweep over into the other pairs. We are going to take a look at the Euro USD, because the Euro USD continued to squeeze higher today, and it is currently sitting right at the descending trend line that has contained the price action since last October. A make or break of this level will probably be dictated during the non-farm payroll report tomorrow. If we have the indication of further quantitative easing, we could see the pair easily move back up towards the 127.50 area. If we see that there is payroll came in better, we could see the pair easily move down lower, initially testing the 125.60, but I believe it would probably go all the way down towards the 124.80 area. The last pair we're going to look at is the USDCAD, just because it has pushed down to its support level, which was between 98.40 and 98. A break of this level would move the pair towards new yearly lows. So there is a good chance that the pair could find a little bit of steam here, looking for a bounce and a move higher. It did break lower, moved all the way down towards 98 today, but it could not find tractions at that level. So we have a lot of action today, and we have a lot of data coming out tomorrow. So it should be an exciting end of the week. All right, this is Chris Keene from A Keen Point of View, and this is Currency Watch. Everybody keep your trades keen and play it safe.